Welcome to a special episode of the High Value Sales Show of Eversprint.com. I'm Malcolm Louie, the managing member of Eversprint, and today we're speaking with James Duncan, the Director of Education and Engagement at Thrive Mortgage, a fast-growing mortgage bank. Welcome to the call, James.
Thanks, Malcolm. Pleasure to be here.
James, Thrive Mortgage's closed and funded loan book, or rather loan transactions, grew from $461 million in 2014 to $884 million in 2017, a 92% increase, and now you're on track to close $900 million worth of loans in 2018, despite the downturn in the market. To get to where Thrive Mortgage is today, what's the one thing your team had to consistently execute over the past few years?
For us, Malcolm, I think it really came down to our process. Several years ago, we took a step back and looked at what are some of the primary pain points with completing a mortgage transaction from start to finish. And a lot of it, with a lot of lenders, their biggest holdup is probably these top three things. Number one, the loan originator was simply taking the information and passing it along without doing a whole lot of setup on the front end. And then second of all, there was poor communication on the back end. Now with us, we had a pretty good system in place, but after we took some time to really evaluate eliminating inefficiencies and maximizing the communication between the teams and using technology in order to increase the speed at which a transaction goes from one stage to the next, we kind of came up with sort of a secret sauce, if you will, of what really separates our process from most other lenders out there in the industry. And I think that was the biggest catalyst to us seeing such tremendous lift over a short period of time. And you pointed out the downturn in the market this year. It has affected every lender in the business. There are some lenders that are no longer in business as of today that they were around at the start of the year, but they're not around anymore. So this is something that we're very, very proud to say. Even though our growth has tapered some as far as our production, we're still very, very proud to be at the numbers that we're at, and we have big goals and aspirations for 2019 as far as getting that growth track back the way it was.
When people are looking to borrow from Thrive, would you say typically Thrive is the only lender they're looking at, or are they looking at a handful and then they're comparing the nuts and bolts of it all?
In this day and age, most shoppers are getting smarter and smarter, and they're getting more and more resourceful with how they go about shopping for their mortgage, whether it's their first one or their 10th one. There are scads of internet resources, online application tools, ways that the consumer can do their own research about who their lender is, more so now than there ever have been before in history. So the clients that we're dealing with typically are much more educated on the process, whether they've been through it or not. They are taking it on themselves to do their own research and to kind of find answers to some of the preliminary questions. But there's still a whole bunch of things that they are unaware of, that they don't have access to. There are literally several dozen variables that go into determining whether or not a borrower is getting the right loan program, not just a loan program, but the right one that's best suited for their long-term financial success. That's where we step in. A lot of loan originators and a lot of our competitors do not take the time to really get to know their borrowers, get to know their spending habits and as well as their saving habits. They don't take the time to really understand what it is that's motivating them and what's the most important thing to them when it comes to this particular transaction. Why are they buying this particular house? What's it going to do for them in the future? Those are the kind of questions that our loan officers and our branch managers will take the time to sit down and actually have that conversation with the borrower. So when they go to an online lender and get a rate quote, and they come back to us and say, this online lender is offering me a half a point lower than you, meaning like half an interest rate lower than you. What's with the difference? We're able to sit down with them and kind of talk them through the differences, talk to them what is that other lender not showing them in terms of total costs of what it's actually going to cost them in the long run when you illustrate that to the client, when you take the time to do that, it really opens their eyes. And it's not a sales gimmick either. It's basically educating the client and saying, okay, this is the scenario. You need to make the choice that's based on what is in your best interest long-term, financially speaking. And that's really the approach that we take that differentiates us from a lot of our competitors.
James, when your clients are evaluating their different borrowing options, under what circumstances do they say, yeah, it makes sense for me to go with Thrive, even though they're a little bit more expensive than this other lender? It makes sense for me to pay a little bit more because I'm getting this in return. Can you maybe quantify a little bit more what that extra value is that Thrive Mortgage can provide?
Sure. That's not going to be the case every single time, us being substantially higher than, say, an online lender. But when we are able to sit down and illustrate to them a true apples to apples comparison, one of the things that's really eye-popping for a lot of clients is that we're really not that far off. The rate that, if you take all the strip away all the shell games that a lot of online lenders like to use, and you boil it down to, okay, what is the final tally going to look like? Our rates are going to be just as competitive as a lot of those other lenders who are giving the initial quotes that are half a point less. So when you take the main thing that a client needs to know is that until you get to a certain stage in the conversation, there's only so much that a lender is A, obligated, or B, has a sufficient amount of information to answer those specific questions and get to the real heart of what's it going to take to get this loan done. And once you reach that stage, that's the point where the borrower is going to see that there's in terms of cost and rate, there's very little that differentiates us from a lot of the big box lenders. The main thing, though, even if there is a time where where we do come in slightly higher, the main thing that I point to is the value in the process. Because our average currently, our average close from application to a stage that we call clear to close, meaning that everything's been checked off and we're ready to send all the documents over to title for them to sit down and sign. Our average turn time from contract to clear to close is 19 days. The industry average is actually closer to 30. So we're closing more than a week ahead of schedule compared to what the other lenders are able to do. And with the increase in the technology that we use, we're actually going to be dropping that average even lower. Our goal is to get to a 10-day close time. And that is pretty much unheard of these days in most lending circles, because there are certain regulations that we have to adhere to that take up 7 of those 10 days. But that is our goal with the technology that we've adopted and some of the things that we're actually in the process of rolling out company-wide. We expect to be there within a very short time frame.
Now, can you share with me how you can really do this, the processes that allow you to be so fast? Because earlier on, you mentioned one aspect of how Thrive does things differently is that you really get to know the borrower, really get to know what their situation is, what their expectations are, why they chose their home that they're buying, and so on. I mean, that takes more time, right? But at the same time, your overall turnaround is way below industry average. So, how are you guys able to do that?
Well, we're able to do that because we know what questions to ask. And so the initial conversations with clients, there's a lot of stuff that is going into our analysis. So it takes a number of things. One, asking great questions. Number 2, it also takes having the technology on the back end that once you have that solution in place, or once you've outlined the 3 scenarios that are in the best interest of the client, and you as the LO or the loan originator are able to go through each scenario and say, okay, this is what you said was most important. Scenario 1 meets all of that criteria. Scenario 2 meets most of that criteria, but it's less expensive. Scenario 3 again meets most of that criteria, but here's the downfall that doesn't. And so we basically present them with options. Now, you can't do that as a loan originator if you don't know guidelines, if you don't know all the loan programs that we offer. So that, coupled with knowing what great questions to be asking of our clients, is really what we pride ourselves on. We have some of the best LOs in the business who are very, very good at what they do, and they work tirelessly to educate themselves on new programs and knowing guidelines and knowing exactly how to handle tricky little situations, such as I had a bankruptcy 3 years ago. Can I get qualified for a mortgage? Well, knowing exactly what track, as a loan originator, knowing exactly what track you need to go down in that situation is imperative, because it might be something where, no, we're not ready. We need another 6 months, 6 to 12 months, and offering that advice, but still staying in touch with them. Whereas if they do that and share that information with another lender, that other lender very likely might just say, hey, give me a call in 12 months and we'll talk then, and click. And that's the end of the relationship. So taking that approach of getting really in-depth, getting right in the middle of understanding that borrower's particular financial situation, and everybody's financial situation is different. They're like snowflakes. No two are the same. But getting into the middle of what makes them tick, what drives them, and what is motivating them to make the choices that they make, that is really key to the start of the whole process. After that, it's really just like putting ingredients into a bread maker and letting it go. Everybody knows their purpose. Everybody downstream from the loan officer knows exactly what they're supposed to do, exactly when they're supposed to do it, and exactly when it's supposed to get done. And that part of the process, that's the easy part. The tough part is at the beginning, doing all the heavy lifting at the beginning and setting up the file the right way, and doing what's and figuring out the best solution for that client long term.
Now, the system that you outlined, the process that you outlined, where you do essentially a deep dive into what's going on with your potential client. Could you, how long would it take for me to be one of the best loan originators if you were to just pop me down in one of your seats in your office? How much training would it be required before I can execute at the caliber that you're talking about?
It would that is a great question, and in my position, that's one that I've had to tackle a number of times. To be full transparency and completely honest, it would take a bit of time. Now, we could train you. Let's say that you are just a top-notch salesperson. You are a high D on the DISC assessment. We could train you everything that you need to know in probably a span of about 6 months. I would say 6 to 9 months, really. That is going real deep into all the programs that we offer, all of the guidelines, knowing how to handle specific situations. Because like I mentioned before, there are literally dozens of different variables that go into pulling together the right loan program for the borrower. What really differentiates our loan officers from other loan officers, more transactional focused loan officers, is that relationship piece, is that establishing the rapport with not just the client themselves, but also with the referral partners who are sending us business. If you stink at that, let's say that you are the greatest salesman, you can sit down and close anything, but if you stink at building the relationship, then you're going to struggle. You're going to struggle in not just in our model, but in any lending model. Consumers don't want to be herded through the process like cattle. They want to know that they have made the right decision, because, I mean, after all, when you take a look at the purchase of a house, we're probably helping people with what is more than we are helping people with what is more than likely the largest single financial transaction they will do in their lifetime. And so there's a big burden and a huge priority on us as loan originators and as lenders to make sure that we're doing everything that we do and making sure that it's in the end client's best interest.
Okay.
So I don't think I specifically answered your question, though. Do you want me to?
No, you did. At the very beginning, you did, and then you elaborated on that. So you definitely covered it. So I appreciate that. James, another question for you. How much of your business comes from repeat business, where people come back to you again and say, I had a fantastic experience with Thrive. I want you guys to help me again with my next mortgage?
A lot, actually. And again, that goes back to the relationships built by the individual loan originator. And if they are doing, it's been said by many in our industry, especially industry coaches, that if you want to be someone's lender for life, you're going to have to talk to them again at some point in their lifetime. So making sure that you have the ability, whether it's through the use of a CRM or through just being uber organized, you have to have the ability to follow up with your current clients as well as your past clients and make sure that you are continually feeding them not just your contact information, but valuable information, things that are going to help them plan and prepare for their financial future. And whether a lot of my repeat clients are on the investment side of things. They are investment buyers who go out, look for rental houses that they can acquire and add to their portfolio. I've had a number of them come through, and they keep coming back to me because they know my as an originator, they know my level of expertise. They know that I can come up with some pretty creative strategies for not just how to acquire the property, but how to manage the financing of it, and knowing what they can and can't do in terms of what's going to be too much leveraging those assets versus the liabilities that are tied to them, and keeping them out of a situation that so many loan originators and brokers were guilty of not doing back during the housing crash.
Can you give some context as to, you made a comment earlier about people, if you want to be a lender for life, you have to stay in touch with them, which totally makes sense, right? So
yeah, that's a Todd Duncan line. I can't take credit for it.
Right. Now, are your loan originators on their own? Is it up to them for staying in touch with people, or does their company have systems in place to help them with that?
We've got a system to help them stay in touch with their clients. We use a CRM. Is it all right for me to say the name?
Yeah, definitely.
Okay. We use a CRM known as Be in Touch, and it is a great tool that a lot of our loan officers take great care in maintaining, and we manage that on the corporate side. There's a member of my team who is our CRM admin, and his main responsibility is coaching all of our LOs, especially our new LOs, on the ins and outs of how that system works, how they can maximize it for their prospecting activities, how they can maximize it for doing drip campaigns. So if they have a conversation with a borrower that says, you know what, I'm just thinking about this. I'm renting now, but my lease isn't up for another 6 months. So, but I didn't know if now is too early to start the conversation. The loan originator has the ability to stay in touch with that client over the course of that 6 months and stay really sticky to that particular prospect, feeding them good information, feeding them, hey, these are some things that we're at the 3-month mark. So these are some things that you need to start thinking about and that we need to start preparing for. This is the kind of documentation I'm going to be asking you for once you do submit the application, so on and so forth. Are you working with a realtor? Well, I know a great one, and we can tie that borrower to a realtor and establish that relationship and build up the value to the referral partner. So that the CRM can handle quite a number of situations and just provide a lot of value to our LOs. There are some LOs who choose to kind of do their own system. Maybe they came from another company where they used a different system that they really, really like. We're fine with that. But as long as they have some methodology of staying on top of their contacts, staying on top of being in front of their referral partners and using it to the best of their ability and getting the word out of how much value we can provide to the process, then we're good with it.
Have you estimated the cost of your systems, your CRM systems, in terms of the cost of acquiring, or not acquiring, but of getting referral business versus the cost of getting new business? That might be an interesting number to compare if you have those figures.
I don't have those figures, but I can just tell you, just based on the analysis that I do on a daily basis, that it would be darn near impossible, and we would drive ourselves absolutely crazy if we did not have a CRM in place. We would not be experiencing near the level of success and near the level of client retention and referral partner retention that we do have if we were not using any CRM.
Right.
It's absolutely a CRM. If I would say in any sales position, a CRM is absolutely critical to your success.
James, for 2018, how many loans do you anticipate that you will close and fund?
By the end of the year, we will have closed and funded over 3,700 loans.
And of those 3,700 loans, how many of those would you say are from repeat business versus brand new loans, first-time borrowers through Thrive Mortgage?
I would say and this is just me going off of just what I've seen, I would say that our repeat business is probably somewhere in the neighborhood of 1 out of every 8 loans is probably going to be a repeat customer.
Does that imply potentially a good number of loans people are seeking loans from other lenders instead of Thrive when it comes to their second loan, third loan?
Not necessarily, because a mortgage loan is something that you're not going to get one every year. It's not like going and renewing a gym membership. It's if somebody is getting a mortgage on their primary residence, they're typically going to keep that for about 3 to 4 years. At the end of that 3 to 4 years, they might be moving up. They might be moving to a different location, and in which case they'll come back to us. So those kind of numbers, to me, indicate that we're doing a pretty good job of retaining the clients that we worked with in the past. I could be completely off on that estimate. I'm just going based off of my impressions of the reviews that I see and how many times I see the comment, I've used such and such loan officer in the past. They were great then, they were great now, that kind of thing. So the mortgage industry, it's not, this isn't something where, unless they're an investment buyer who is purchasing like 3 or 4 homes per year, we're probably not going to see the same client every single year, once a year for a new transaction, which is normal,
Okay.
because most people aren't going out and getting a mortgage that frequently.
From your experience, from your company's experience, how often do they turn to Thrive again? How many times are they repeat borrowers via Thrive?
Without possessing any empirical data to present to you, I would say that better than 2/3 of our clients are going to be repeat customers for any number of reasons. I think that the main reason why somebody might not come back to Thrive Mortgage for another loan down the road, whether it's 3, 4, 5 years in the future, maybe because they're moving to a state or a location where we don't have a license or don't have a retail branch operation. As far as, I think, a better response or a better analysis to do is how many of those past clients are referring us additional business. That's usually where we see the biggest lift. Again, as I stated before, people aren't getting a mortgage every single year, not typically, but they are telling their friends about the experience that they had, and they're telling their family, hey, you've got to use this loan officer from Thrive Mortgage because I had a great experience. They walked me through everything. So on and so forth, just relaying how great a lending experience it was. That's really, I think, a better, and especially in our industry, I think that the referral business that we get from our past clients speaks greater volumes than coming back to us for the next loan. While we certainly want that to happen as well, it's going to be a little bit longer incubation period for that specific client to come back for a second transaction.
For every 10 clients who borrow from Thrive, how many of those 10 will make a referral that will result in business for your company?
I'd say at least 9.
Wow.
Yeah, just because of the job that RLOs do, not just during the transaction, but after the transaction as well. There have been, and I kind of point back to the CRM the Be in Touch CRM that we use. We have a certain set of campaigns that are set up so that during the manufacturing process of the loan, we're in communication with the buyer's agent, as well as the listing agent on the property. Earlier this year, I had a closing where a listing agent reached out to me after the closing, or I followed up with them and said, hey, hope this was a great experience. We'd love to meet you at some point in the future. This realtor and I never met face to face, but when we were able to actually touch base, she said, "I have never seen a lender communicate as well." I mean, this is a top performing realtor in the Austin area. She said, "I have never worked with a lender that communicated as well as you did during this process. I appreciated all the updates. You were very professional, so on and so forth." And she had a lot of really nice things to say. And I said, "Thank you very much." Well, within the span of the next 2 weeks, she sent me 2 refinance referrals. Now, for your audience that don't, for the members of your audience that don't fully understand the implication of that, a realtor in a refinance transaction is not needed. This particular realtor, because of her experience with me in that one closing, sent me 2 refinance referrals of clients of hers that she had sold homes to that wanted to refinance their home. So she was getting nothing out of the transaction, yet she still felt that the value was built in the relationship that she and I had with her as the listing agent. She still felt strongly enough that, like, this company gets it. They know what they're doing. And she sent me 2 clients that she was going to get nothing out of the transaction. We've since done a couple other purchase deals since then, but that alone speaks volumes to the power of our process and how we have structured our business and how we have tailored a way that all parties see immense value through this transaction, not just the speed at which we were able to get things done, but the counsel that we provide and the communication that we provide all through all the stages of the process. One of the top complaints that people on the purchase side, or that consumers and also realtors have about lenders, is lack of communication. That is the #1 complaint across the industry. Well,
And,
we've solved that problem.
and these communications, what channels are being used? Are you talking about telephone calls, emails, written?
All of it. Typically, it's just emails, text message, phone calls, basically giving them any necessary update through all the different milestones, because there's certain benchmarks that you have to hit within a certain time frame with a real estate transaction. And so keeping them abreast of all those important milestones, what's going on right now, when are we expected to be done with underwriting, when are we expecting the appraisal to come back, when have inspections been completed. There are dozens of things that need to be communicated throughout the course of completing a loan transaction or completing a real estate purchase, and the lender's a very important component of that. And when realtors are not getting the updates that they need, they're not able to share that information with their clients, whether they're the seller or the buyer. And so circumventing that problem and being the source of communication with the progress of the loan, that kind of puts us in the driver's seat for driving the value to that transaction.
Yeah,
and we
definitely
do a very good job of it.
Yeah, I mean, I think the biggest issue is if there are any delays of any sort, right? Everyone wants to
Exactly.
know about it so you can fix it right away, right? They don't want to surprise, 3 days before the deadline.
Exactly. I never call a realtor or a client. I never call them to give them a problem if I haven't without being able to offer at least one solution to the problem.
Right, that makes sense. Now, do you have systems in place to make all these communications really easy for your loan originators?
Yes. Again, the CRM, there's a lot of, we have a number of campaigns that are built into our CRM that once certain triggers get sent from our loan origination system, they get pushed over to our CRM so that the CRM knows to fire off a particular message in a particular sequence to a particular recipient. So let's say the appraisal. The appraisal is one of the things, and this is nothing against appraisers. It just takes time for them to do what they do. The appraisal is one of the items that we have to have on every loan transaction that typically takes the longest number of just total days. There's other things that we can do while the appraisal is in the process, but the appraisal is one of the key things that we need in order to complete a transaction. So sometimes an appraisal, depending on the market, sometimes an appraisal can take 5 to 7 business days from when it's ordered to when the appraiser actually submits the finished report. So that's a long stretch of time, especially when you're trying to close in 10 days. So the key is we order the appraisal early, and then when it gets back, we have an underwriter who reviews all the appraisals that come in and make sure that the appraisal is legit, that all the collateral checks out, and that the valuation to the subject property, meaning the property that's being purchased, make sure that the valuation to matches the contract agreement, or make sure that's within a reasonable range. There are some times when an appraisal will come back and it misses the mark. The appraiser says, well, you have a purchase price of $300,000. The appraisal came in at $275,000. I don't think the appraiser is basically saying, I don't think that this house is worth $300,000. That's a problem. And having a ready solution for how to mitigate that is what kind of separates the really top-notch lenders from the also-rans. And that's kind of one of the things that we specialize. But back to the communication question, that is something that needs to be communicated to all parties immediately. Whether it missed value or whether it came right in on the number. Either way, once we get that report back, we review it quickly, and then we post that, and then that message gets fired out to all parties saying, hey, we got the appraisal back, everything's good, full steam ahead. And having those triggers, and that's just one example of one benchmark throughout the course of the transaction. There's multiple. So there's really about 5 or 6 stages where there needs to be a certain kind of communication going out to all the parties, and that's what really sets a good loan officer apart. That, as well as just supplemental calls for, hey, just want to let you know, got the documentation back and we're good to go, everything checks out. And just having those quick little phone calls or quick little text messages. These days, a lot of our borrowers are comfortable receiving this kind of information via text, and so we've gotten a little text heavy, and so we built into our campaigns certain text messages going out to the parties, because they just want, it might not need to be a big, huge, long message. Sometimes it's just a real quick little, hey, how you doing? This is today's update.
Right. Now, the system is entirely automated and it fires these off automatically, or does the loan origination officer review them and say, yes, send this, yes, send that?
The LO does have that choice. Most of our loan officers opt to have those messages sent automatically, simply because it takes one more thing off of their shoulders and frees them up to do more prospecting or to do more relationship building with their referral partners.
Right.
So they do have the option of automating those campaigns if they are very detail oriented and very particular and want to make sure that they know exactly when a message is going out. That's fine. They can do that. It's just taking a little bit more time than what the system was designed to do, but they can if they want.
Okay. Now, you mentioned prospecting. Can you share how much of your business comes from referrals and how much of it comes from the hard work that your LOs do to find new business?
I'd lump both of those into the same category, honestly.
Okay.
I realize the question that you're getting at, but they are the loan officer's business is largely referral based. All of our branches and all of our loan originators in each of our branches are responsible for the vast majority of all the leads and prospecting that they get. There are occasional times when somebody will pick up the phone and call the corporate office and tell us, hey, I'm down in Houston, Texas, and I'm looking for a loan officer. I saw some advertisement on social media about you guys and was really curious if you could connect me with if I could talk to somebody about a loan. Well, we're not going to keep that here in-house. We do have a handful of corporate loan officers, but they're not intended to be competitors to our retail world. The corporate loan officers are handling specific one-off situations. Sometimes they'll take a lead that comes in the corporate office, but really we want to feed as much of that business out to our local retail branches in the area, because they know the areas where they serve better than we do. So if a call comes in and says, yeah, I'm down in the Houston area, we'll get specific. Okay, what part of Houston are you looking in? Well, that's great. We got a branch right down the street from you. Okay. And we'll funnel it to that branch. So, but that's a very rare exception. Most of the prospecting and most of the referrals that come in are solely based on the efforts of the individual LO out in the field.
James, how do your LOs find new business, the ones that aren't coming from referrals?
Every LO is very adept at promoting themselves and promoting their business. So that we encourage them, and we'll help on the marketing, from the marketing department's perspective, we'll support them with any marketing collateral that they need in terms of whether it's flyers. We prefer those to be digital. We like to encourage our sales teams to promote themselves as much as possible through social media. That's one of the things that we do as the marketing team is we are pushing a lot of material out through our social media channels that promote our products or services or our fast turn times, the value that we provide to all different parties. So our objective from a corporate stance is promoting the brand and getting our name out there as often as possible and through as many channels as possible. The LO then takes additional collateral that we produce specifically for them, posts it to their social media channels. We also offer a lot of branding coaching and lead generation coaching of various different tactics that they can use to whether it's hosting special events or open houses are kind of how things used to go, but with the advent of all the technology that's available to us, it makes more sense for that prospecting to be handled digitally. And then a third track is that nothing really replaces the personal one-on-one relationships that our loan officers establish with the individual realtor and with other referral partners, not just realtors, but financial planners, accountants, attorneys, especially real estate attorneys, investment groups, and the like. So every market is different, just like every lending situation is different. So we give our LOs the freedom to prospect however they see fit or whatever suits their style the best. And we're here to offer as much support and coaching and guidance as they need.
So what's your thinking, or what's the company's thinking, and perhaps even your thinking as well, about not having a more corporate-driven lead generation? Like, for example, Thrive Mortgage will advertise, proactively seek out people in the home buying process, and then collect the leads, and then send them to the relevant local office for them to follow up on.
That is a strategy that some have pitched. For me personally, and I believe that I can speak for just kind of how the impressions on the corporate, there are so many different pay for clicks or pay for leads or pay for lead generation resources out there, and everyone has a favorite. And our personal stance is it really just relates to the cost of it. For us to be purchasing leads right now in the industry, there with market compression and with everything that's going on in terms of rates and competitiveness amongst the lenders, not too long ago, a lot of the big box lenders that have just almost unlimited, I won't say completely unlimited, but almost unlimited resources, it seems, at their disposal, went and bought up all the major sources of leads a few months ago. In our industry, buying valid leads is an expensive proposition. So for us, we feel it's a more responsible use of our own of our resources and of our growth projections to not engage in that, and instead to allow the LO to select which lead generation resources are most beneficial to them. Some pay for Zillow leads, some spend money on Facebook ads or LinkedIn promotions or something along those lines. There are a lot of ways that you can generate leads, and everybody has their own different style of what they consider to be a viable lead. For us, it's really just providing them the resources, the internal resources to brand themselves, not just promote the Thrive brand, but also promote their own individual brand as a Thrive loan officer, and make sure that we are supporting them as best as we can.
Yeah, that makes sense for sure. People have different styles, different personalities, and different ways of building their business. For 2019, what are the company's targets for closed and funded loans versus 2018? I know in 2018, you're looking to close around $900 million worth of loans.
Mhm.
What's your target for 2019, and what's the plan to get there?
We're expecting, as far as our total closed and funded loan volume, we're expecting by the end of the year to be at 1.25 to 1.5 billion in closed and funded volume, and that's obviously that's a market jump from what we had in 2017 and 2018. Um, but there's a number of factors that are playing into that. One, technology that we are in the process of adopting and rolling out to all of our branches is going to make our process much, much quicker. So the typical LO who this year was closing 3 or 4 loans a month, next year, because of the advanced technology and because of the advanced tools that we are providing to our teams, they're going to be able to do transactions much, much faster, and we'll probably be able to see at least a 50 to 100% increase in their business. So that's one strategy. The other strategy is, because of the brand change, the rebranding, and because of our ability at marketing the Thrive brand and getting the name recognition in multiple different states, we're branching out to new markets. And that is largely a result of our new national sales director, a gentleman named Randall Gillespie. And he has done a fantastic job of using his connections in the industry, as he is a longtime veteran of the mortgage industry. And using his name and his reputation, people know that he's not going to go somewhere that is just some kind of fly-by-night organization. It was a very serious step in the right direction for us, and because of the connections that he has, we're able to now branch into a number of other markets where we didn't previously have a foothold. And the types of recruiting that we are doing and the coaching that we're providing our existing staff, we fully expect to see that kind of a lift in our business. So as many of our competitors kind of struggle to adjust to the winds of change, so to speak, in the industry, we've already made those adjustments and have trimmed our sails, if I can use a sailing analogy, and we know our destination, and we've got a very solid plan of how to get there.
Great, fantastic. Now, what do you see as the biggest challenges that your team would need to overcome to execute the strategies you outlined to get you from 900 million to 1.25 or 1.5 billion of closed and funded transactions?
One of the biggest challenges that we're going to face are the variables that we can't control. We can only do so much as far in regards to what rates we're able to offer, with rates largely being driven by the bond market and the kind of a tangential tie to the stock market. Watching the volatility that's been going on in the stock market recently is, I don't want to say disconcerting, that's a little extreme of a word, but it is certainly something that's been eye-catching for a few months. It's kind of a weird situation for the mortgage industry to be in, because the economy is going very, very well in just about every sector except real estate. And that's it's both a frustration as well as kind of a shoulder shrug, where you're just kind of like, well, I mean, that's one component that we just have very little control over.
Okay.
And but as far as
what about the components that you do have control over? What are the challenges there that um, that you guys are facing that you can have some degree of control over, that you need to overcome to hit your goals?
As far as what we can control, we can control our process. We can control the way that we market ourselves and the service that we provide. And the more we the more we adhere to what our core values are, the more our clients and our future clients are going to really understand what we mean when we talk about offering a legendary lending experience. We want this to be something where they don't have the stress that normally is associated with buying a new home, because it is a very stressful transaction. We can also control our growth. We can control what markets we're going into. We also have the ability to control kind of how we position ourselves in terms of the branding of who we are, and getting the name out there.
Okay.
So there are a number of things that we can control that
Mm-hmm.
that we're taking full advantage of.
So of those things you mentioned, which one's the biggest challenge to execute well and to achieve? Is it getting your brand out there, getting people out there to be aware of Thrive? Is that the biggest challenge? Is it hiring additional people to grow your retail branch outlet? Is it getting people to use the technology, or is it totally something entirely different? What is the biggest challenge that you definitely need to overcome to hit your 2019 targets?
Well, in my opinion, I'm a little biased in this, but I'll say it's the first option that you offered there. And as head of the marketing team for Thrive, I would say my personal biggest challenge is going to be that exactly that, branding and getting the name recognition beefed up to a level where I think we've got a long way to go before Thrive and Quicken Quicken Loans are uttered in the same sentence, but that's okay. They kind of had a little bit of a head start on us. But um, as long as we are doing our level best to make sure that Thrive is synonymous with value and that Thrive is synonymous with integrity and with serving our clients to the best of our abilities and keeping their best interests at top of mind, then I think that we'll be successful in that regard. And as big as the mortgage industry is, it actually is kind of a small community where word travels fast, and a lot of people know a lot of other people. And so it's kind of funny going to conferences now as opposed to before the name change. When I would tell people who I work for, and would say Georgetown Mortgage, they'd be like, okay, where are you? Now, when I say we're Thrive, I work for Thrive Mortgage, they're just like, oh, I read an article about y'all the other day. And I'm starting to see that more and more and more. And I think that largely has to do with the efforts of the marketing team and the company as a whole, to be quite honest with you, because there are a lot of people that really latched on to the name change and the brand change and have done a great job themselves of promoting it. So it's not just our internal efforts, it's also the efforts of everybody out in the field.
James, from a marketing perspective, what's the one biggest marketing challenge you have right now? I know you talked about getting the word out, but what's your plan to get the word out that you think is going to be most effective, and how is that plan working out so far for you?
I think the biggest thing for us, I guess you could call it a challenge. One of the biggest things for us is making sure that our social media game is on point. That is something that we have historically not been great at, but with this year, especially leading up to and then during and then after the rebrand, we really had a major lift in our social media game, and both not just the quantity of postings across all the different platforms, but also the messaging and getting things out there that are valuable. One of the primary things that's really, really important to us is that no matter how big we grow, that we still maintain that community feel and the feel of being a family-owned business, because we still are a family-owned business. And the one of the ways that we are doing that is seeking ways to highlight the ways that our branches are involved in their local communities. We have been doing a number of we call them community videos, but basically it's highlighting certain branches. For instance, we have a branch up in our Dallas area that works very closely every year with a homeless shelter in the Dallas area. We recently just published a video that was shot by our videography team highlighting both the work of that homeless shelter, as well as interviewing the branch members who are part of that volunteering effort, and will and every year donate thousands and thousands of dollars worth of resources and their time and go serve at the homeless shelter. They take 2 days to do it, and they serve them a hot meal. Well, we documented the whole thing, almost like a kind of a Ken Burns type special, and boiled it down to like a 6-minute video, and we promoted that through social media, and it has given us a tremendous amount of lift. Now, we're not doing that just to get the marketing lift. We're doing it to help promote that homeless shelter, promote the volunteerism of our branch there. But we received a tremendous amount of applause from our folks in the field in other markets saying that is a fantastic video. We need to do more of this. And as the director of marketing, I'm sitting there nodding my head going, exactly, that's the reason why we do this. I really think that being a company that has a ready answer for why we're in business is going to be very, very critical. And that's the big message that we want to get out to the rest of the world, or at least the rest of the markets where we serve clients, is that we're not just in this for the profits, that we are a company that is driven by more than that, that we are a community of individuals with some great stories to tell, and we want to meet other storytellers and our referral partners and our clients, and make a greater impact than just getting somebody a mortgage. We're giving somebody an opportunity to build their families and to build their dreams and build their life. That's what drives us.
Fantastic. 2 last questions for you,
Sure.
James. Who are your ideal clients, and what's the best way for them to reach you and your team?
Ideal clients really is just anybody that needs solutions for financing. There are, I mean, we'll probably break down the number of loans we do by demographic. If we had time, that would be a pretty extensive report. But I would say that anybody who is a first-time home buyer, they're going to come to us. We don't delve into into non-QM or non-qualified mortgage products. Just a quick definition of that: non-QM versus QM. QM is basically the safe types of loans. Those are the different down payment programs that get sold to Fannie and Freddie. We can do jumbos. We can work with VA buyers. We can work with FHA buyers. A QM loan is basically anything where as much risk as possible has been mitigated. Non-QM, a lot of people mistakenly refer to these as subprime loans. That's a whole different discussion, but non-QM are loans that are that add on a little bit more risk onto both the lender's shoulders as well as the borrower's shoulders. They typically come with a higher interest rate. That's not really a model that we're interested in playing in. We do have broker options where we can send those to another investor that we have relationships with. But that's not our typical client. Our typical client is somebody who wants to get into just a safe, conservative type of loan. We can find alternatives for them if the qualifying criteria doesn't match up with what we offer, but that's our ideal client. And
the best way for them to reach you? And the best way for them to reach you?
The best way for them to reach us is probably going to be through social media, actually, instead of sending them to a website. The website will give them basic information that they can find just about anywhere. But the way to find us directly and most quickly would be to follow us on Facebook. Just search up Thrive Mortgage. You'll find us. Twitter, same thing. LinkedIn, same thing. Going to our social media platforms is usually going to be the quickest way to interact with us and find. And if you get in touch with us at corporate, we can direct you to a retail location that will be able to serve you excellently.
Thanks for joining us today, James, and sharing how your company has accelerated their high-value sales.
Absolutely, Malcolm. It's been my pleasure, and thank you very much for the invitation.
We've been speaking with James Duncan, the Director of Education and Engagement at Thrive Mortgage, about his company's rapid growth. For interviews with other fast-growing, high-value sales companies, or to learn how we can accelerate your firm's high-value sales through automation, visit eversprint.com.